Well, good day. I'm Epstein, and here we are with your Spider ETF stock market wrap-up on a red day for Monday, tax day, April 15th. Just look behind me. You have the gold market up. Schwab is up on this. All the others are in the red, if you will. Copper was higher, and silver and gold. LUV, that's the only other one. Oh my gosh. So what happened? The market completely changed its nature today. What the market did is it started off on a firm note, which was confusing to begin with to many of us. Generally, you get warfare, and the market immediately goes to buying of bonds and notes. The gold market, which did end up going up late in the day and holding on to it. Generally, the dollar. But you get a sell-off typically in stocks. You get a sell-off in a lot of commodities per se. And that's what didn't happen. And then it reversed around noon, and the market just kept building up momentum till you let go in a number of markets. Tesla down $9. They're letting go of 15,000, not 10,000 people. I read other reports. It's 15,000 people. NVIDIA back down into the 860 level right now. Amazon got hit for $2 today. I mean, these are a lot of markets that have held up, and they're not holding up right now. Google down again, $2. New lows on this break in AMC, down to the 247 level. All right, you know, I keep telling you that can go bankrupt, so you got to be very, very careful. The only thing that can keep that company going, in my opinion, for the next 6 to 8 months, if they don't have enough cash, is they got to float stock, or who the heck's going to buy their bonds? I don't know. I can't imagine the rate you'd have to get. Even Microsoft, to my surprise, down a lot today. I didn't expect Microsoft to get hit that way. Nothing came out to hurt it. Goldman had stellar earnings. Schwab had good earnings. And that takes me to the next one that might have them, Citigroup. So here's Citigroup. We haven't covered this. I was looking back, and the market had a big outside day to the downside on Friday, and it followed through today. So what do we have in the way of a pattern? We've got a higher high and a lower low pattern. So not truly a trend, but the market has certainly said that it's made a statement near $64 that the price was too high. Now the question is, where might it go? The battleground for several sessions, it began all the way back here, was the 18-day average of closes. The correction began from just near that 64, went to that 18-day, started here, then again here, and now it's saying, okay, lower. But how much lower is the big question? And you're already under the Bollinger Band. You're at 58.56. That number's 58.87. And you're oversold. So, earnings. We're going to get the bank earnings on it. We're going to see how good it is. Many people think this company has completely redone itself, and they are on their way to a lot of profitability, and this whole area could be a base the market works from. I heard that today over and over on CNBC. You had that happen before back here, and it did have a heck of a run. It went from 56 up to the 64 level. Now it's retesting that zone. So I get it from a technician's point of view that the market's looking at that. When we take a look at DKNG, remember I told you I thought the market was through as we left the March Madness, and I said I think it's a short sale. And now listen to what I'm saying. I think it's a short cover. Right down here. Keep in the back of your mind, when they eventually report earnings, they had a pretty good season with all the gambling, I'm assuming, that went on. In UGA, the gasoline, so again, energy markets, again, we have to look at what the consumer's doing. We had retail sales today, and they beat on, be it the core number, and they beat on the headline number. But where are they buying, the consumer? Well, they're not in sporting goods stores buying those goods. The more you dove into it, it was some furniture, but it was certainly gasoline. And the other thing they don't do with retail sales is they don't adjust it for inflation. But the numbers were at least double what the trade was looking for. So what does that mean? Could that put the Fed on further hold? That was my first thought when I looked at it. I'm going, gee, this consumer's strong. Yeah, they might be shifting what they're buying, but they're still buying like there's no tomorrow. In XLF, the financial services, well, what do you do with interest rates now that are over 4.6 in the 10-year note? You get scared. Could they be on their way to 5%? Yeah. Will you hear people eventually come out and get on TV and say they're going to 6.5%? That's what always happens. When they're near zero, they're going negative, and when they're up in the stratosphere, they're going even higher. That is the normal parlance that takes place. You have lower highs, lower lows. You're under the Bollinger Band for a couple of sessions now. You're oversold. Is the market getting overdone? Yep. Could it go lower? Sure. Next stopping spot could be the 100-day average. I'd be looking at today's highs in a lot of these markets that have outside days down to see what they offer. And before we go on XLI, do we have any big reports tomorrow? So let's take a look at that together. And we have the Red Book Group. They'll come out with retail sales. Housing starts and building permit data coming out at 7:30. We got the spring season here. And the Federal Reserve will release their monthly industrial production and capacity numbers at 8:15. So that's going to be important. You know, when I hear the word capacity, Elon Musk today came out and said it rightly. Rightly so. Number one, he hated letting people go. Number two, they're not getting enough production out of the people that they have. And number three, that he won't say, but I have been saying, at the end of the day, Tesla, as great a company, as great a following as it has, is at the end of the day an auto manufacturer. Not an easy business. Welcome now to a mature company that's got problems, the likes of which GM, Ford, Chrysler, I can go on and on. They've all had it in their lifetimes. You know it, we know it. And their car is long in the tooth, all right? Yeah, they can change a few things. They can wrap it. They're not changing the car. You got to get out there, Elon, and give something new, whatever that is in your mind. But it's got to be new, and these little tweaks. You're not Porsche, okay? You're just not Porsche and Volkswagen. I know maybe that's your goal, all right? But people are sort of saying they want a fresh look. Give it to them. Make a cheap car, which I know you abandoned for a while. In FCX, Freeport. Okay, so on Friday, you lost the bullish embedded reading. Before you go for new highs, you often come down. Here's what I found interesting. If you looked at copper prices, they soared over the week, over Sunday night and today. And I said to my people when I was doing my review, I said, why are they soaring? I forgot. Friday, the UK and the United States barred metals coming in from Russia. So aluminum, you've got nickel, you've got copper. These are big items that come in. I think we get 4 or 6% at the London Metal Exchange of all its copper was coming from Russia. Now, prior to, I think the date was April 13th, deliveries can still come in and that metal's accepted. But anything new metal, how they figure that one out is beyond me, but new production metal, no. That cannot be delivered on the LME. So you start throwing all these crazy actions. We have enough metal, we have too much metal, and the metals took off because of that action. Everybody going, where we're going to get additional metal. There's plenty on the ground out there, but the sanctions are in place, and you better be careful. You might get sanctions in place now from Congress on Iranian oil. The easiest target after that attack is for the United States to stand up and say to China, any oil you buy breaks, blah, blah, blah. You'll be taken out of the banking system if you do so and so with our sanctions. Big problem for Iran. So they rolled the dice. They did what they want, but there's about 1,800,000 barrels a day that goes to China from them. That is what now our Congress is going to try to stop in some manner. We'll see if they can get it done. They claim they were voting on it today. Lower highs, lower lows, coming down to the 100-day average. And you can see what it does here. By the way, that's not friendly for President Biden if he stops that, because if they can't sell it, China has to buy it somewhere else, and it can drive prices even further higher. That, in theory, I want to use this very carefully. In theory, that oil shouldn't be sold, all right, if it's sanctioned, the way that Congress is trying to do it. And anyone using our banking system, if they apply that, there could be real teeth to it. In XHB, well, the home builders couldn't withstand the high interest rates going up. They tried. You had a nice bounce this morning, but it ain't over just yet. You got to show that the market can withstand this. On the energy sector, even though energies came back nicely late in the day after Israel made statements. Israel had a war cabinet meeting today. And in that meeting, they didn't tell you what they're going to do. But after the meeting or during the meeting, one of the IDF generals that was at the base that got hit on Saturday said that Israel will retaliate. Well, we know they're going to retaliate. We just don't know what. And why the market took that to mean gold should explode again and all that, I was surprised at it because we know there'll be a retaliation. But nobody's going to tell you when. Does Israel first use this? When they get a little bit, please listen, a bit of public sympathy because the world's been against them with the Palestinian situation, 33,000 dead. Do they take that now that they've been hit with over 300 missiles and finish up in Rafah and forget Iran for the moment? And they can say that for the moment. Calm things down, whatever. I don't know if they'll do that or not. I don't see them wanting to open another front. So I think whatever the attack is going to be exceptionally surgical. It'll probably be against a military installation. It won't be against the population. But it'll be something in time. Higher lows, higher highs. The gold market came roaring back. It tried all day to lose its bullish embedded reading. At the end of the day, it kept it. The fact that it was losing it so much means it can't afford to slip very much from here if it's going to go higher. SLV, same exact pattern. If you were watching during the day, you were losing the reading. It finally came back late in the day. They all got a bid late in the day in the metal markets, except copper. It just sort of languished all day. It's still over the 80 level, but any close under 79 could give the market reason to pull back a bit right here. TLT, these are the interest rates. Market just beating the heck out of this. UUP in the dollar. Off to the races. I'm about to do a special report on the euro currency because I think that we have an opportunity here on good rallies, should they show up, to be hitting the euro, and I think they're going to be moving interest rates down very soon. Tomorrow morning, that is Tuesday morning, at New York time, I think it's 9 a.m. Eastern time, Miss Lagarde's going to be the head of the European Central Bank interviewed. I think you'll want to take a good hard look at that interview. I will be. FXE, just a vertical decline. I hate vertical declines. Where do you put a stop if you decide to get in it? Just let go. But on rallies, I'm certainly looking at the short side of that market and many, many others. Now, if you'd like to learn how to work with what I do, such as the swing lines, moving averages, the slow stochastics, Bollinger Bands, and window envelopes, I created a completely new course. Every chapter is brand new. Just finished recording them. There's 45 chapters. It's about 4.5 hours of videos. You see what I do. You do the same thing. So in those chapters and the charting software, I show you what it is, and then I give you examples. And then every single morning in my morning subscriber video, I'll review. Here's a Bollinger Band, folks. It's hitting it. It should get a bounce in the market. We review, and I hone in on different things each day for these people and for my subscribers that are looking for trades. And I dissect the trades, where they're going to be. Are they going to be good? Are they going to be bad? You don't know until the trade is over. Nobody does. Are they a trade for just a trade, or are you holding on for a while? How do you determine that? Are you trading off the weekly chart, the daily chart? I teach you how to do all that. So if you're interested in learning, this is not expensive. You go to our website, iraepstein.com. You can move your cursor up to the top here. It'll go to iraepstein.com under Education. That's where this is located. And because it's a brand new course, I'm offering a 10% inaugural price, 10% off the retail price. And it's right there. You don't need a coupon. It shows you that it's right there when you go to get it. Hope you take advantage of it. With it, remember, you get my full research, both the stocks, spiders, ETFs, and My full research written, and the others, if you already have them, well, then you're a subscriber. You don't need them. But a lot of people haven't seen them, and you'll get them for 30 days so that you can see what I do, how I do it, track how you learn, and that's what this is all about. I'm Ira. Have yourself a good evening. I'll see you tomorrow.